basically talks about kind of the predicament that the US is in right now, how the US is actually in a lot of debt, which has a lot of implications, right? We could either go down a path of inflation and inflate our way out of the debt, or we can go into austerity and stop spending, which is kind of a lot of what Trump has been doing by like firing people in the government and all that. It's reducing spend. Uh, there's a bunch of different paths that the country can go down, right? And some of them are going to affect things differently, right? Does that mean that you're going to want to buy gold, or does that mean you're going to want to buy stocks, or what kinds of stocks you're going to want to buy? It's a very interesting read. If you haven't read it yet, I highly recommend you give it a read. Or actually, what's really cool too is you can actually even talk to ChatGPT about this book. I got, I think, a PDF of the book, and I gave it to ChatGPT, and it actually was able to answer some pretty cool questions. It's influenced me to want to basically buy a lot more commodities, right? So I've been thinking a lot about buying gold companies and things like that. I've been thinking a lot about buying companies with shorter duration, right? Meaning, there's a lot of these like high flying tech companies, the AI companies that make money far, far in the future. Those tend to be riskier things around periods like this. So I've been thinking about more buying things like, the Walmarts and the McDonald's, those types of companies. And also a lot of international stocks. I've been kind of looking around, what are some international buys that we can make? This book has been a very big influence in my life. I wonder if you guys would get a very good result from it as well. I'm also reading another book right now called 1929, right? By, what is his name again? Book, Andrew Ross Sorkin. This is another really good book that I just started reading. It's a very good one as well. If you have not read this one yet, I'd highly recommend reading 1929 as well. It might freak you out a little bit, but it's actually a really, really good read because you start to realize how similar 1929 is to our current predicament, right? There's actually a lot of parallels. It's actually kind of scary. Because in 1929, what happened in the 1920s was a lot of retail investors got into the stock market and they started investing on margin, right? Which means basically borrowing money to invest in the stock market. We got a lot of really high valuations in certain stocks. We had a lot of leverage in the market, so a lot of debt. So if you think about it, there's a lot of parallels to today. The Robin Hoods of the world really got a lot of retail traders in. A lot of people have been investing on margin or with other types of leverage, which definitely puts a lot of risk into the system. We are actually at a very high valuation right now for the stock market. If you take a look at S&P 500 PE ratio, for those of you that don't know what a PE ratio is, it's the price to earnings ratio. It's basically how expensive is the stock market. And if you look at it, we are at historically high levels right now. We're at about a 30. This is as of, when is this exact number? The 30 is, I'm trying to get the exact date. Yeah, December of 2025. We're at a 30 PE ratio on the stock market. If you just draw a line across here, you could see we're at one of the highest valuations in history. This goes back till 1871. And you can see here we're at a 30. The average has been about 16. The median has been about 15. We're pretty damn close to the peak right now. So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.